please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, markets still have a strong bull grip. Important to note that it's again following the theme of last week, whereby the large caps are a distance ahead of the mid caps. Actually, the memory of last week is mid caps after opening along with the large caps have moved into the red. But at the moment, they're just holding on with about a 0.25% gain. And it's the large caps that are calling the shots. But let's discuss earnings. L&T Tech has grown practically across all the major segments this quarter. Telecom has posted a strong performance with robust margin improvement. Keshab Panda, Managing Director and Chief Executive Officer of L&T Technology Services, joins us on the phone line. Mr. Panda, good morning. Thanks much for joining us. Telecom seems the surprising great performer for you. But if you can take us through other sectors as well, like industrial products, which is a big contributor for you, transport, a big contributor for you, can the performances get better?
Lata, well, I think very good morning to you. We have, if you see L&T Technology Services as a company, we work on various segments, not only telecom. When you say telecom, we focus on semiconductor more and more. Again, semiconductor more on the chip side. You know, the lot of today, if you drive a car, there are 100 chips there in the car. So we are more into those areas, the futuristic technology. That's where we are good at. And that has done, we have done very well in that. And, the multi-vertical segment, which we did as a strategy before, I think that is paying us dividend today. You know, we are strong in industrial product, as you said, and industrial product has done well. And number of patents we filed there, new technology we do in industrial product is amazing. Our engineers do that. At the same time, we also do very well in the plant engineering, which was, was slow earlier. Plant engineering has done well, will continue to do well. Some of the area for smart plant design and the new technology investment, what we did before, that is helping us in the growth of plant engineering as well. So I think overall, when you see medical, plant engineering, industrial, transportation is done well. See, you need to remember there are two things we do transportation very well. One is auto electronics. We are into infotainment, we are into ADAS, we are into multiple areas, which I think the investment we did earlier, creating lab and so on, that also is helping us for our growth. So, and there is one thing on off-highway, the auto segment is the leader. They do in auto electronics. Then off-highway, they are following that in the same areas what auto segment is doing. So I think our heritage of, always remember that L&T Technology Services is a different company, because our 79 years, 8 years of L&T heritage, that is helping us. So put together, engineering heritage, technology, and all put together, I think that's the storyline here.
Mr. Panda, if you can just tell us a little more about the margins in the telecom business, because the business has done well, and now margins have gone to 12% versus, single digits earlier. Can you do better than that?
See, I think what happens when you get a large deals, usually when you have a lot of on-site assignment. If you see few quarters ago and today, our on-site percentage of revenue has gone up because knowledge transfer happens at the beginning. Once the knowledge transfer process over, you see last quarter, this quarter we did well. We'll continue to do well coming quarters on the margin improvement. As long as you have on-site component more, this margin is going to be issue. I think telecom is not going to be an issue moving forward. Again, telecom is not segment more on the semiconductor and high level of chips what we do. And that is going to be a great moving forward.
Okay. Margins, would you be able to do better? I mean, you're inching higher.
Let me tell you, we have a very strong control of the margin parameter. As a services company, this is very important. Two things we do, though. A lot of technology investment, large deals, what we do, we got to balance this very well. We are committed to that. We have a very tight control on the margin. And every parameter, I think everyone, starting from project managers to the general managers to the, the COO, working all day and night to make sure that we balance all the parameters. That is one of the things very close to my heart, making sure every parameter we understand and deliver to the market as per market expectations. So I'm sure we are in good shape.
Yes, sir. Okay. Sorry to reiterate on margins so much, but I wanted to reiterate on revenues as well. We are seeing a fairly decent growth in several industrial segments as well. Can we expect this run rate to continue of 7% or whatever, 7 to 8%? or can there be an even quantum leap from here?
Well, I think I have given the guidance. I said this year we'll do 18% growth, year on year. That guidance I've given in last call.
Okay.
And our intent is to do, and I also said we are going to grow double-digit coming years,
sure.
and we'll have much more visibility when we move forward to, 1 or 2 quarters. So that's where we are.
Okay,
yes.
Mr. Panda, we'll let you go on that note. Thank you for joining us. From one L&T company to another, L&T Finance has seen a robust growth in disbursement this quarter, especially in the rural book. Dinanath Dubashi, the MD and CEO of the company, is with us now. This disbursement growth has been very strong, Mr. Dubashi. What are you looking forward to in terms of FY18 and FY19? What could be a sustainable growth?
Maximum disbursement growth is actually coming from rural sector. We all know that there are tremendous tailwinds in the rural sector. Kharif crop has been decent, Rabi is quite good. Government schemes, loan waivers, etc. are giving very good boost to the rural sector. Also, we are gaining market share. We are concentrating on the best manufacturers, the large dealers, and gaining market share based on our digital and TACT proposition. So that is where the growth is coming from. We expect the rural sector to continue to do well, and hence we expect to continue to gain market share. That's what I can talk about. In home loans, in housing, whereas the overall housing sector is doing quite decently, but our growth has happened in using our strengths, our group strengths of knowing the builders well, and our construction funding book has shown very good growth. As far as wholesale is concerned, that is any case our strength business infrastructure. We are number 1, and that is where we are growing. So we expect sort of this kind of growth rates to continue.
You know, what you have often called your defocused book, that is continuing to decline. Do we see it getting to zero very soon?
Doing for quite some time. It will take, say, one year more for it to become completely negligible. If we get an opportunity to sell, we can do it even before that.
Okay, GNPA remains sticky in an absolute basis in Q3 versus Q2. Has there been any incremental slippage?
According to us, I think the asset quality is improving quite well. So I will talk sector by sector. Rural asset quality has actually absolute reduced, both in terms of percentage as well as absolute NPAs, it has reduced. Housing has largely remained same. It is anywhere low and it has remained same. Wholesale, we had always given the guidance that it will, as companies go to NCLT and we start taking provisions, etc., the GNPA level will slowly creep up. So where you see from quarter to quarter, the NPAs, the absolute NPA, as you rightly said, has just slightly reduced. It is coming from a sharp reduction in rural NPAs and a small increase in infra NPAs. And that's what explains why the GNPAs are same. What we have done absolutely is actually further increase provision coverage, and hence the NNPAs are now down to something like 2.9% from 3.3% even sequential.
Okay, you know, you're now a AAA rated entity. How does this affect your cost of funding in the times to come?
Let me put it in context. Already our cost of funds has reduced from last year 8.7 to 8.1% in this quarter. We are a L&T company, and being a AA plus company and a L&T company, we were getting near AAA rates anyway in the market. The group strength adds a lot of strength to our treasury. Being AAA, yes, it will give further advantages. How much quantifiable out of it is, we will only know as time goes ahead.
Okay.
But nonetheless, it's a very positive development.
Okay, what was the net interest margin in Q3 compared to Q2?
We measure NIMs plus fees as the measurable metric, because the philosophy of this organization is, while NIMs will be the function of product mix, will be the function of which business does well in a particular quarter, NIMs plus fees is what your top line really is. And NIMs plus fees from last year has increased from 6.6% to 7% this year, and last quarter also it was 7%. So it has been maintained at 7% quarter on quarter.
Okay, thanks a lot for that and all the best. That's L&T Finance. But moving from one company to another, Persistent Systems has posted very good numbers led by a strong revenue growth in the Alliance division. Anand Deshpande, the founder, MD and CEO of the company, is with us. Mr. Deshpande, can you tell me about the margins? Because there's been a jump in margins and revenues in the Alliance business. What have been the triggers for that?
So the overall revenue this quarter was $122.5 million, which is a QOQ 3.8%. And in rupee terms, it was 7,918.9 million Indian rupees, 4% quarter on quarter. The growth in revenue, of course, was largely driven by growth in IP revenues, which had seasonality around Q4 of the calendar year with one of our largest customers. So that contributed quite a bit to the revenue number going up in this quarter. The profit margins have many reasons why the profit margins went up. Primarily, of course, the higher increase of IP revenue causes the margins to be better. In addition to that, the fact that we had been focusing a lot on improving efficiency of the system across the board, and some tax credits that we were able to get all helped in improving the margins quite a bit.
Okay, so are the margins at current level sustainable?
See, it's very hard to really say that in some sense, but we do expect continued improved margins. I don't know how much improvement is going to be possible, and a lot of this depends on the revenue numbers that we generate. So yeah, by and large, they are sustainable at these levels, but it's hard to say if it will be next quarter.
Okay, so that's about the margins. I just want to point out that the PSU banks have started falling quite a bit in the last 10 minutes or so. IDBI Bank, Bank of Baroda, PNB, sudden fall, all down about 1 to 3 odd %, and now at the low point. So don't lose sight of the fact that while the market is higher, Sensex is still up almost 300 points. There is a selling pressure that's coming into the PSU banks. Mr. Deshpande, will you be able to maintain that double-digit revenue growth guidance that you had laid out for FY19?
Yeah, we should be in the zone. See, one of the things that has happened as a consequence of our changes in the business model, specifically where we are doing a lot more IP-related revenues, the predictability on some of these deals has become much harder. We have these quarter-on-quarter numbers that keep coming in from IP revenues, and it's very hard to say exactly how much will come through. So we do have a reasonable pipeline to believe that we will make the double-digit growth and the profit margins that we are expected to deliver. But it's very hard to predict at this time. The predictability in general in the business is rather difficult to make precise numbers right now.
Yeah, take your point on that. Mr. Deshpande, was there any wage hike this quarter?
Yes, so what we had done was the majority of the company, which we have most of the programmers at the junior levels, they were all given a wage hike this quarter, and that was absorbed as part of this quarter's number. The other good thing you have to note is that this is typically a slow quarter on the services side because of furloughs, leaves, and all the other things. But those were also kind of taken in stride in this quarter, so I'm pretty pleased about that.
Okay, the share of independent software vendor business has been declining. It's down from 44 to 40%. What's the outlook there?
No, so that is by much because other businesses have gone up. So we have been focusing a lot more on the enterprise customers and customers that are beyond the ISV market, and that has caused the relative decline in the percentages for ISV business.
Okay, and what's the current cash in the books? I mean, what's the plan as far as utilization of cash goes?
Right. So, yeah, I mean, we are very happy to see that we have more than ₹1 billion in cash this quarter. And the plan is, of course, to spend some of it in terms of acquisitions and others. We had done one acquisition in the previous quarter, and hopefully we should see some more in the next few quarters. We also announced a dividend of ₹7 per share.
Okay, Mr. Deshpande, thanks a lot for your time today. Well, that's a persistent system, but let's get back to market because there are a lot of stocks which are looking up right now. So it's turning out to be a bit of a large cap day, and metals in particular doing well. Tata Steel, for example, is having a bit of a run. Ashwini Gujral, Mitesh Thakkar and Prakash Kaba with us now. Ashwini, so decent day for the market so far, and large cap driven day, the mid caps a bit soft. Your thoughts on how trade has panned out and stock calls for now?
See, the market has come off the highs of the day. A lot of stocks are facing selling. But like I said in the morning, that IT came off Thursday. So if you bought IT in the morning, you are doing fairly well because the IT index is up now 170, TCS, etc. Tata Elxsi have all gone up. One interesting stock that I can see, UPL, which had a big decline on Thursday, is beginning to recover. So my sense is that the market is kind of moving on from the results, and maybe by afternoon, evening, we could see 800 back on UPL. So sticking with the IT and stocks like UPL, which are fertilizer and kind of budget related, should keep you safe. Other than that, I don't think there is much to do because the market gapped up and then hasn't made any headway. So it becomes very difficult to act on either side. PSU banks post an up opening are going down. So those are still shorting candidates. I think they still are recovering from their recap information, etc. As far as stocks right now are concerned, TCS is a buy with a stop of 3100, target of 3250. Tata Elxsi is a buy with a stop of 1085, target of 1140. And Tata Steel can be bought with a stop of 777, target of 800.
Okay, well, the stock of the moment in the broader markets is Emphasis. It's up almost 12% right now. Remember, the company reported a good set of numbers this time. Margin improvement, dollar revenue growth was about, 3% or so. And look at the way that's just soaring now. The entire pocket actually has been doing well, mid-cap IT.
Yeah, mid-cap IT has done well, and Emphasis is not in F&O, so that also is one reason that it's doing well. But I think, Ashwin, the market heard you on UPL. Let's just pull out the intraday chart of that stock, 788 right now. You said it's possible to have 800 by the end of the day today on UPL?
See, it's very simple that people went short because of the results, etc. Now, if they are not getting follow-through, UPL is that kind of stock. Once short covering comes in, it can really fly. So anybody who's short because of the results, etc., it's clear that it's not giving great amounts of follow-through. So chances are you could have the stock moving higher. Similar action on TCS, Tata Elxsi, they all went down, on Thursday. And again, they are also seeing pullbacks.
Okay, actually for me, the most shocking performer is GSPL. One would have thought after that numbers that, people will buy the good news. They've chosen to take profit. Yes. What is the next trade on that, Ashwini, GSPL?
See, yesterday, GSPL, I was looking at it. In 3 weeks, it gained from 160 to 270. So obviously, someone knew the good results that were coming, etc. If a stock is, behaving badly to good results, that means it needs to get into a consolidation. So maybe closer to 235, 240 GSPL, once it corrects, I think it should be ripe for buying. This good news hasn't really taken it higher.
Okay, TCS, by the way, I think it's phenomenal, 3% higher now on TCS, and once again approaching those lifetime highs. So, Ashwini, 3250, I think was the previous high. You can correct me if I'm wrong, but what next for this stock then if it takes that out?
See, the stock is having mild, 1.5% corrections, and when it moves, it's moving, 3-4%. It's almost moving like a mid cap. So it's very clear some very large money is moving into TCS. So I don't think a stock can talk louder to say that, where the money is going. So on all declines, IT index, the large stocks, smaller stocks, all are seeing buying. In fact, the banks, if you see, they rally up to 170, 180, and then the gas is let out. Okay. So IT and banks, I think clearly IT is the outperformer right now.
Sure.
Okay, we should stick with large caps. So today is not the day to show all these new gen kind of listings, because there's a large move happening in the large caps, led by, of course, IT, autos, couple of these stocks. Mitesh, your trades now?
I have a buy on Tata Steel with a stop at 769 for targets of 810, and Maruti is a buy, keep a stop at 9470, look for targets close to about 9800.
Okay. Anything in the banks, Mitesh, that you would play? I mean, the Private sector banks are doing well today.
Yeah,
say a
one
Kotak
which I
Bank.
like the most, yeah, the one which I like the most is Axis and Kotak Bank. I think Axis is very close to its highest ever levels of 615, 620. And once we see the 630 levels being taken out, I think then the stock should head towards 700 plus. I like that. Kotak was a recommendation a few days back with targets close to about 1100. I think it's hit those levels. Not the best time to buy, but I think the uptrend remains. But you would want to see some kind of dips or consolidation to buy into.
Okay, well, Eicher Motors is the other one that is following suit in the large caps now. 3.5% rally on Eicher Motors. And remember, it's fallen quite a bit. I mean, since the start of the year, it's down 10%. So perhaps some buying on dips. Prakash Gaba is with us. Prakash, any thoughts on how to approach the auto stocks? Because there seems to be a fire in people's belly when it comes to buying, you know, auto names now. What would your top trades be?
Eicher Motors, certainly looking good. Seen so much of a down move here. The way it's trading looks like it's heading to, my target was 28,000, looks like 28,000 will be crossed and maybe go to 28,500 in a day or so. The stop that I had was 26,000, but I would have 26,500. I would modify, it's already gone up now. So Eicher Motors certainly is looking good for a day or two. I like Pidilite as well. Looks like it's got some kind of a base formation is on. An intraday buy signal has been generated here. Targets on the upside are 905, stop below 870.
Okay, Tata Elxsi, by the way, is now at high point. Infosys is at high point. So turning out to be an IT day. In fact, the Sensex is now up 300 points. And a large part of that move is because of IT. And the mid-cap index, by the way, is almost in the red. Also keep an eye on the advanced decline.
You know, I take your point about TCS and the way, as Ashwini says, behaving like a mid-cap stock. But you're ignoring the HDFC twins. By their very nature, they have a lot of weight in the index. And HDFC Bank, although it's up only 0.89, is actually outperforming the index. And it brings a lot of weight to the index, and as does HDFC. Yes. So, although, you know, they pale in comparison to the way Maruti and TCS are moving, which are the other two heavyweights contributing maximum to the index, these two as well.
These two as well. Of course, you know, it ties in with what we were saying in the morning, Lata, that, you know, it's going to be a large cap sort of per day, and, you know, the next space could squarely belong to that space. Ashwini, finally, your thoughts on metals? I mean, Tata Steel is one call that you've given for the day, but anything else that stands out?
See, I think Eicher is having a trend day, and after many days of downside, the way it is moving in the early morning trades, I think we could see another 300-400 on Eicher, because this looks like a turnaround day for Eicher. On metals, you know, I think the early morning JSPL reaction hasn't done too much for metals. So possibly it's IT, Eicher, things like UPL, etc. Otherwise, the market post the open, I don't think is showing great amounts of upside.
So for investors who missed out Eicher earlier, Ashwini, is today a good day to hop on? Do you think it's resuming its move again?
See, it's not still cheap in terms of valuation, etc., but definitely 10,000 off its all-time high. I would think with a low below Thursday's low, stop below Thursday's low, you are looking at 3,000-4,000 rupee move on Eicher.
Okay, Ashwini, thanks a lot for that. By the way, since it's an IT day today, the new listing, Newgen Software, I guess it was a good day to list. That's up almost about 6.5 to 7% odd. Now I think volumes are picking up on that new listing. Let's just get it up on board for you. Remember, the company has had a strong performance. It's about a 20% compounded annual growth over the last 4 years, and it provides enterprise solutions to a whole host of sectors in the technology space, banking, government, PSUs, etc. We'll talk about that in greater detail. It's turning out to be a good listing. But for now, Manisha Gupta joins in to give us a quick roundup of all that's happening in the commodity space. And Manisha, zinc prices are just through the roof.
It sure is, yes, but come to that in a bit. Let's start with the crude oil prices, because that has been holding quite firm as well. We've broken above 4,200 for the Indian prices there. 70 has been holding in the international markets as well, off the kind of highs, because we did see 71.30 in the previous week. You saw a good 3 to 4.5% of gains for both the crude varieties, and we've started this week on the positive note as well. You know, what also is supportive for the prices, of course, is the weakness in the US dollar. That one is trading at a 3-year lows, and that's exactly that that has been supportive for the gold and silver prices, but we have seen that go in for a profit taking. The international markets are trading flat, and the Indian prices have seen more declines actually than what the international markets actually have been putting forth. But 30,000 still holding for the MCX prices, and that clearly is looking good on the charts. As you pointed out, well, yes, zinc is something to keep an eye on. We have seen the prices through the roof. It has been nearly 2.5% gains in the previous week, and we have started 3% on the higher side on Shanghai and LME, both of those exchanges. So no surprises really that we have opened 3% on the higher side for the Indian markets. It is trading at around 10-year highs for that one, but not too far off is lead, which is trading at an 8-year highs on your screens. We have seen strong gains continue for the nickel prices, which is already up by 7% in 2018 until time, with those 2% gains that you have seen come in for that one for today as well. So buying strategies is what we are looking at the start of the week, and we have them from Anand Rathi. They have a buy on gold, 30,400 is what they're watching out on that one. They also have buy calls coming in for energy and metals. For crude oil prices, 3,250, or other that should be 3,250 is what they're looking at onto that one. And they also have a buy call coming in for copper. 460 is their target on that one on the higher side.